All right, with this transaction, we're going to take a look at received cash from sales, $980 T8. With this transaction, what's happening here, we have two accounts. We have the account cash, cash is an asset, and we have sales. Sales is a capital account. And so we're going to apply them first to the T accounts, and then we'll take that analysis and apply it to the journal entry. And so we have cash and we have sales. All right. So the transaction said received cash from sales. If I received cash, just like when I get paid, the value of cash in my wallet goes up. Same with the business. If the business receives cash, its cash is going to go up. Cash is an asset. Assets increase on the debit side. And so we're going to increase cash $980 by debiting the account. Sales, if you look, is an owner's equity account. Sales carries a normal balance of a credit, which means it increases on the credit side. And so we are going to credit sales, making that account go up in value. If I could just type it in there. All right. So we have an equal debit and equal credit on opposite sides of the accounting equation. Assets equals liabilities plus owner's equity. And so our accounting equation is in balance. All right, so let's take this and apply it to the journal entry. All right. And so this is also taking place on the 8th. We have a special amount column for cash. And so we're going to debit cash, $980. Oh, but look at this. We also have a special amount column for sales credit, $980. And then if you follow the book says to put a check mark in the account title because we've handled, there's nothing to put in there, right? Because this is our account description for sales credit. This is our account description for cash debit. So there's nothing to put in right here. I don't know how to put a check mark in. There's no check mark on the keyboard. So we're just going to put an X in right there. Fair enough. And then the document number is T8. That T stands for cash register tape. What would happen is, the cash would come from people coming in and buying supplies and whatnot, products from your store at the end of the day or end of the week, however often the business does it. They run the cash register tape to see how much money is in there in the drawer, subtract out what the started with, and anything above that would be your sales. And so that's what the tape is originating from. It's originating from that. So you got the cash register tape, and you got the day 8. All right. The other thing is with this transaction, a little bit unique here, and kind of taking a look at what we'll be doing in chapter 4. We'll be doing what's called posting. Because we're not going to be posting anything from the general debit and general credit columns, we're actually going to put an X in right there as well. And that sets us up for posting this in chapter 4.